Hi there, accounting students. Okay, so I'm going to run you through a complete accounting cycle. You are going to have to do something similar to this on your final project, actually almost exactly like this. So pay attention. So first thing you're going to have to do is come up with a name for your business. I'm just going to call it Amanda, full stop. All right, it's a great name. Excellent. Don't tell me it's not. The owner is me. And if I can spell my name right, no, is me. And then the fiscal year, again, that's the period where if our income statement is a movie, we're looking at that period of time. So January 1 to December 31st, 2018. You can choose whatever you'd like. That's probably the easiest. These two sections here, we're not going to go through today because that is what will be part of your final project. So if I go to the transactions tab down here, I'm going to start with my first transaction. And when you invest in a business, your first transaction should always be an investment. Okay. So the date will be January 1st, 2018. Again, you can make that up. When we invest in a business, the first account is cash, right? We're putting cash into the business. And the second account is owner's equity. And the cash again is an asset. Owner's equity is an equity account. And we're increasing cash and we are increasing owner's equity. Um, and I'm going to invest $100,000. I'm going to do this in dollars just because it's easier for me into my business. Okay. We know how this will affect our balance sheet. So now I have some money to play with, and I'm going to buy some equipment. So transaction number 2 is me buying equipment on January 2nd, 2018. So again, I'm going to buy some equipment with on credit. So I've got equipment and I've got accounts payable. Equipment is an asset. Accounts payable is a liability. And equipment is going to increase. And accounts payable is also going to increase. Again, we're balanced. And I'm going to buy $50,000 worth of equipment. I need a lot of equipment. And in this case, on your final project, I'm going to want you to give me the link here, to where you got this number from. So if that is like a website that shows restaurant equipment, something like that. Okay, so we've got that information. Transaction number 3. I've got some equipment, but I don't have anywhere to put it. So I'm going to pay some rent. So I've got rent expense and cash on January 3rd, 2018. And rent expense again is an expense, which is equity. I'm going to call this equity for lack of confusion. Equity. Cash is an asset. And rent expense decreases equity, right? And cash decreases. So we're doing well here. My rent expense is $10,000. Okay, so going through all of this, I've paid some rent, I've done this stuff. Transaction number 4, I'm going to buy some inventory. So January 4th, 2018, I'm going to buy some inventory. So we've got accounts payable. No, we have 2 transactions in accounts payable now, and inventory. Accounts payable is a liability account. Inventory is an asset, and they're both increasing. Okay, and I'm going to buy $5,000 worth of inventory. Now I have some revenue on January 5th, 2018. So I bought some inventory and I have some revenue. So this is going to be catering revenue. Ooh, listen to that soft. That is an equity account. And I'm going to have cash, accounts receivable. So this person has paid on credit, which is an asset. It's going to get really loud here because it's just about to rain, but hopefully you can stick with me here. Equity is going to decrease. Accounts receivable is going to increase. Okay. Equity is going to increase. Let's catch all that. So my revenue I've charged is $11,000. Nice round even numbers here. So I know if I've have revenue, eventually I would have counted my inventory, which is what we talked about in last class. So I'm going to do that up at the top on the side here. So my inventory beginning is, beginning inventory, which is what we started with, is 0, right? We started at the beginning. Then I have purchases of, it was right here, inventory of 5,000. And then I know we may have counted at the end. So we've got our cost of goods sold and then inventory count. So let's assume we counted all of our inventory and we have $1,000 worth of inventory left. So we counted this, which is a physical count, which means we went into the restaurant, we counted all of our stuff left over, like with this much pepper and this many apples and whatever, that's what's left. So to find out our cost of goods sold, we take this and we subtract the, we take our 5,000 and we subtract 1,000, which I could do in my head, but I'm showing you the formulas, and we get 4,000. Okay, so, and that's actually, it's a negative number here, right? It's an expense. So we're putting it in brackets. Perfect. And I'm just going to underline this for our clarity's sake. Okay, so we know that our cost of goods sold is $4,000. So for this transaction number 6, which is also on January 5th, 2018, notice that same day as the revenue, we have cost of goods sold, expense, and the other account that it affects, inventory. So this is equity, this is assets. Okay, equity is going to decrease. Inventory is also going to decrease. By what amount? By our cost of goods sold amount, which is $4,000. Okay, $4,000. And now you'll notice we had up here, if I look at inventory, we had $5,000 in inventory. We've taken out $4,000 in inventory, which leaves us with our inventory count amount of 1,000. 5 minus 4 is 1. Excellent. I'm going to stop there for this example just so we can do it really simply. So the next thing we're going to do is our income statement. Okay, so I am going to merge these cells just to make it look really nice here. I clicked this button up here, which is merge. So Amanda, full stop, income statement, or statement of earnings, which is the new one. I've always said income statement, so I'm a bit confused. And this is for the year ended December 31st, 2018. We have revenue. And our revenue, we only have catering revenue. So we don't really need to worry about too much stuff. Our catering revenue, I'm going to click equals. I'm going to go back to my transactions for ease and find my revenue amount, which is 11. If I wanted to add other ones, I could just click the plus sign and click other numbers. Super easy for us in this class right now. So we've got a total catering revenue, looks like that. And as I'm looking here, these need to be centered. So I'm click up there. Okay, catering revenue, expenses. Which expenses did I have? So I had rent expense so far and cost of goods sold expense. So my rent expense, I just go back in here and find it here, which is right this one. And cost of goods sold expense, which is transactions found here, is here. And again, if you have multiple expenses in the same one, you just click the plus and click the other numbers on your transactions. What I would suggest that you do is as you're going through, right, maybe highlight these, the amounts that you have covered. So I've covered this one, and I got rent expense, catering revenue, cost of goods sold expense. So these are the ones that I've covered because we need to make sure all of these numbers go into either the income statement or the balance sheet. So total expenses, easiest way to do that, I'm going to move these over here actually. You'll notice I'm cutting off some of my letters here, so I'm going to do this. Total expenses equals sum bracket these numbers, boom, And then let's put a nice underline over here so the accountants know to add. Total expenses are 14. Eep. So that means we have a net loss. A net loss of 11 minus 14. Oops. 11 minus 14. And this one gets bolded and underlined. Some nice rain going on there. Ooh. Okay, so we've done that. Now we need to do our balance sheet. So I'm going to save myself some time and copy this into this one. Nice. Here's our balance sheet here, but this is actually our statement of financial position. And again, this is just December 31st, 2018, because this is a picture. So assets. What assets do we have? We have, oops, here, starting at the beginning, we have cash, equipment, inventory, and accounts receivable. So cash, accounts receivable, inventory, equipment. Okay, so in order to find our cash balance, we need to go back to here and we say, okay, we increased by 100,000. Great. Then it decreased here by 10,000. Then in cash again. Did we use cash at all anymore? Nope, only twice. So that's how much cash we have. I'm just going to check this here for to make sure I'm covering off everything. Okay, great. And then next one is accounts receivable, and we only had one of those, which is 11,000 right here. So accounts receivable is 11,000. Inventory. Again, inventory, we started with 5,000 and then we took out 4,000, which is 1. Equipment, we have equipment here is 50. Okay. Oops, it moved my equal sign. Equal sign has to be at the beginning. Okay, I'm going to highlight those things. Okay, so now we have our asset. So equals sum all of these things. Give it a double underline here. Okay, this is our total assets. Now we have liabilities, which we only have accounts payable, which is equal to, we have 2 accounts payable, I think. Accounts payable here, and for our inventory here, increase and increase, so that's great. And then our owner's equity is equal to 100,000 right here. But it's not. So remember, we have some loss. So our owner's equity, we have our opening owner's equity. Then we had a loss, a net loss. Then we have an ending owner's equity. Okay, opening owner's equity is equal to, again, this 100,000 investment. Net loss is equal to this number here in our income statement. And I'm just going to have it show it in brackets so it's nice and clear there. Ending owner's equity, let's move these over as well. And then our ending owner's equity is the sum of these 2 things, which is equal to this plus this. Notice that has 2 digits there. I'm just going to get rid of those using this handy dandy button up here. Ending owner's equity. And then our total liabilities and owner's equity is equal to our accounts payable plus this, which you will notice balances. Okay, so it balances with my total asset. These 2 numbers here that I'm highlighting in blue, they equal each other. We have a nice statement of financial position here. Everything balances. We have a nice income statement, although we lost some money, and we have some transactions. So I've only shown you a few of these, but during class, we're going to do some more, and we are going to, this is what you're going to do on your final project, is track just a really simple, complete accounting cycle for a business. So thank you for following along.